Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. Let's get in the zone, the CMZ zone. Well, last night we had the final accumulation of what was going on in the Eurozone. They finally came out. Bondholders took an agreed 50% haircut on their investments. Well, that was all good. The IMF, then China, all came together, offered to put in about $1 trillion to try and help bail out these European banks. Well, a lot of economists say that that's just kind of kicking the can down the road, but it was evident in the markets that investors, speculators, traders, all were loving this. The S&P futures rallied up right off the bat. Dow futures gained 60 points in a matter of 3 minutes, basically up 200 points overnight. S&P is up about 25 points overnight. Everything was looking good. The euro dollar really took this into effect, blasted off, busted above 140, which was a key resistance area. It's looking into the 141 area. It looks to test 143 as far as I can tell. That's one of my first resistance areas. Moving on, the weakening of the U.S. dollar is going to cause crude oil futures, because it's dollar correlated. They're going to start going up. I hope to not see them go above 95. That's my first resistance area. Want it to stay in there, just because the higher oil goes, the less people are going to be able to spend on other things. But then this morning, we got the GDP and pending home sales. GDP came in right as expected, 2.5%, really good. Pending home sales was a little bit bad on the low side. It came in around 84 versus what was expected of 88. That has to do with tight lending practices, and basically people can't really get mortgages for those homes that are already on the market. All right. Then we have the gold trade. Gold busted up there above the 1700 mark, kind of after this information came out last night at around 8 p.m. Chicago time. Gold futures started selling off. Basically, it looked like traders and investors, speculators were taking their money out of gold and diving into equity markets. You know, the equity people that were buying into this downswing at the beginning of the month are really looking vilified right now. With the GDP up at 2.5%, it's making those PE ratios look very plausible at this point. All right, investors that are into the equities are looking for long-term gains on this. They're going to basically see continued upward movement. S&Ps look like they could test the 1290 to 1300 area if all these numbers continue to come out. Then basically you're going to see the dollar continue to lose ground as the European markets are starting to come back into play here. All right, take it easy. We'll see you tomorrow on the zone.
wonderful. Why, if our scarecrow back in Kansas could do that, the crows would be scared to pieces.
They would? Where's Kansas?